I'm a value investor and I wait for great companies to be priced at the price that I want to buy them and then buy shares in companies like Apple. Great company. Their balance sheet is just incredible. How much cash and marketable securities they have on their balance sheet. But their stock is really popular. People really understand what Apple does because they likely own an iPhone or a MacBook. And that makes them somewhat very familiar and comfortable in buying their stock. So the stock tends to be priced quite high most of the time. This stock had an excellent 2023, being one of the stocks that rose over 40% in the Magnificent Seven stocks. Their market cap is incredible, almost $3 trillion dollars in value. Warren Buffett owns this stock. It's just got a lot of things going for it. Now, I don't buy stocks just because they're popular. I buy stocks because they're a really good value. And Apple really provided opportunities to buy the stock in 2024. The stock has dipped and it provided a pretty good discount recently. I'm glad I bought into Apple. I bought some shares. I didn't dive in head first, principally because Apple is not going to offer up a big discount, but it is going to offer up a value investor a price that I'm willing to pay for a great company. I'd like to take you through my analysis. I'd like to value Apple, share that analysis with you, and also share with you what my intent is with this stock. I own a few shares and I need to make a decision whether I should buy more shares, hold, or sell my shares in Apple. Keep in mind, I'm an individual value investor, just sharing my analysis for other investors to take a look at. I hope you find it interesting. It is not financial advice, and I'm not recommending you buy or sell Apple stock. I hope you find my video interesting, and please leave comments. Now, looking at Apple for this current year, 2024, the year to date performance on Apple is pretty much flat. It really has gone up a bit, gone down significantly, and we're really flat for the last 4.5 months. If we look at the annual return of the stock, it's up only 8%. So this stock has not overperformed. You'd have to look at an Nvidia or another stock to really show a stock that's just been performing really, really well. Also, if you look at the past year, you can really see a lot of volatility where the stock really came down. It was trading down as far low as $165 per share, and it's currently at $186 per share. So that is interesting. Volatility is my friend. As a stock, especially on a great company, goes up and down, I can wait for it to come down into price levels that I'm willing to buy. Now, being prepared with the right information that tells me, hey, this is a good price to buy it at, this is where it's discounted, that is where I have to do my homework, do my analysis, and I'll share that analysis with you in a few minutes. More about Apple. This is a very large company with revenues above $380 billion. Just humongous, incredible. Their net income alone is over $100 billion if you look at 2023. Their forward PE is 26.68, which is a little higher than the S&P, but this is a high quality company. They pay a really small dividend, about 0.5% as a dividend rate. A lot of analysts, as you would expect, cover Apple, and they have a buy rating. They say the stock is discounted by about 9%. Overall, this company, their revenues really grew coming out of the pandemic. They grew really nicely, especially their services, but they hit a wall on growth in 2023. The revenues actually went down by 3%. And they're beginning to really flatten out. So revenue growth is just not expected out of Apple. They don't have a big launch of a new product that's really going to just be a catapult to growing the company. So that's one reality with Apple. They do have opportunities for growth around AI. If they can put AI in the hands of people by putting it into the iPhone, I think that has a lot of upside. But other than that, I can't think of any big causal factors that are going to really push the Apple revenue higher. It's already super high. Their balance sheet is where they're super impressive. If you look at their cash and you look at investments, both on the short term and long term investments, they have a huge amount of cash and marketable investments, well over $100 billion. And I'm going to use that along with free cash flows to value the company. They don't have more debt than they do cash and marketable securities. Their debt is well below their net cash and marketable securities. So I consider their balance sheet really being debt free because they can pay off all debt if they wanted to. Their free cash flows are incredible. If you look at the trailing 12 months, their free cash flow is a little over $100 billion. And I'm going to use that in my valuation model that uses free cash flows. In addition to free cash flows, I'm going to look at earnings per share. The company is very well covered by 29 plus analysts, and their earnings per share are expected to be $6.68 per share. It's expected those earnings per share are going to grow nicely by 9% in 24, 9% in 25, 8% in 26, and even better in 27. So overall, the earnings per share is really solid with the company. That's another measure that I look at to value the company. I'm going to value Apple using their free cash flows and also using their earnings per share. To get started with free cash flows, I'm going to start with their trailing 12 months of free cash flow and increase it by 4%, which is the growth rate I expect from the company in the first 4 years. They're going to grow the cash flows by 4%. I also expect the same growth rate in the future for terminal value. So across the board, it's going to grow 4%. When I look at all those free cash flows and discount those cash flows by 7.5% as a discount rate, I get the value of all those free cash flows of $2.8 trillion. The cash and marketable securities on the balance sheet amount to $162 billion. And the total debt amounts to $102 billion. So the net equity value when I add the cash and marketable securities and I take away debt is $2.9 trillion. And the current market cap is $2.86 trillion. So there's a small discount of 2% on the stock. 2% so close to zero. I'd rather just say that it's fairly priced at the current stock price. Earnings per share. It's expected they're going to do $6.68 in their current year. I'm going to use a PE at 25 just because they're not growing. It's a great company, but they're not growing. So I'm going to go with 25 versus their forward PE that you're seeing on most of the platforms for information. And I'm going to grow that earnings per share by 8%. It gives me about $180 stock price, but the current stock price is $186. So using the earnings per share actually shows that the stock is being priced at a premium of 3%. That said, when I blend the two, putting more weight on the free cash flow method, I get a 0%, no premium, no discount. Now, it's always okay to pay a reasonable price on a great company. But Apple has seen a lot of down days and a lot of downward pressure at times. And I do believe the stock market is currently priced very high. So I'm going to use those details as I make my decision whether I should buy, hold, or sell Apple stock. Looking at the balance sheet, the debt to EBITDA ratio looks great, frankly, because they have a net zero debt. They have more cash and marketable securities than debt itself. So really, you're at zero, well below the 3 that I'm looking for when I compare debt to EBITDA. They have a small dividend. It's 0.5%, which is interesting. Well, I'm going to look at the 3 areas that I really want to make sure I'm bought into. First is the company. Do I like the company, their products? Do I think the company is a leader in their space, in their industry? And do I like their management team? Overall, Apple's a great company. I really like all of the above. The only concern I have is the lack of growth. And I think a problem they have is they're so big. It's very hard to grow when you're so big. So hopefully they find ways to continue to expand the value that they have because they're so entrenched in so many users through their iPhone. But we'll see how that goes. They are doing a massive stock buyback, which is interesting, and they're going to remove shares from the marketplace. That's a good idea, so it could really have the stock price really rise and not have the stock go down too much. Next is balance sheet. The balance sheet for Apple is excellent. As mentioned, they really have net zero debt. Their credit rating, when we look at a bond issued out by Apple, is as good as it gets. So very good balance sheet. I'm completely comfortable with their balance sheet. Now the discount. There is no discount on Apple. And that is an area that causes me to pause. I would like to see a downturn in the stock before I buy more shares. Maybe if we could see a correction in the market and a downward correction, and if we see that the Apple stock drop 5, maybe 10%, I'd be a buyer at those price levels. And not too long ago, I did buy shares using that philosophy, and I'm up 9% on the stock. It's a $7,500 investment. My investment is now worth $8,000, giving me a 9% yield on a stock that I bought less than 3 months ago. So overall, I'm glad that I follow these principles of value investing and wait for a great company to be priced at the level that I want to invest in and then take advantage of it. I'll be doing the same going forward on Apple, waiting for the stock price to be priced at a level that I'm willing to invest in. Thank you for watching the video. I hope you found it interesting. Good luck investing in 2024.